Hello and welcome. You're watching India and the World on DeKoder. I'm Nidhi Razdan. To say that these are challenging times for India's economy would be an understatement. As we speak, you and I have experienced as many as four fuel hikes in just the last 10, 11 days. And I think it would be safe to say that more will follow. The Prime Minister, with his warning to the country, has made it clear that these will be tough times. The rupee has been sliding against the dollar. It's now hovering around that 96, 97 mark for quite a number of days now. And we've also seen warning signs about where things are headed with airlines like Air India cutting back their international flights because of the fuel price hikes. They've now announced today, in fact, that they'll also be substantially cutting down their domestic flights. And when fuel prices are hiked in the way that they have been, it has a cascading effect on the rest of the economy as well. But are India's economic challenges today all to do with this war between the US and Iran, or is it something more fundamental that we need to address? That is exactly what Arvind Subramanian, former chief economic advisor to the government of India, one of the country's leading economists, has argued in a couple of pieces published this week. And we have him joining us from Washington, D.C. today, where he's a senior fellow at the Peterson Institute for International Economics. Arvind Subramaniam, it's great to have you back with us on Decoder. There is so much to unpack. With what you've written, and I wanted to go point wise, beginning with how you have pointed out that the crisis, for instance, with the rupee that we see today is something that actually preceded this war, that it was amongst the worst performing currencies in in this sort of bracket of countries even before the war. So my question is, what does that reflect? Does that reflect that investor sentiment about India is not as upbeat as it should be?
Yeah, hi, thanks for having me on the show, Nidhi. I think, first of all, just to be clear, this is a massive shock to India. There's no question about it. In the short run, it's a shock because it's not just about energy and petroleum, it's about natural gas, it's about fertilizer, it's about maybe remittances coming down, reduced exports to the Gulf. So, in the short run, there is a kind of foreign exchange issue. But the puzzle is that, or the perspective is two points. One, why has it become such a big problem when the underlying fundamentals are supposedly not bad? Inflation has been relatively low. Even our current account deficit is not very large. We're supposedly growing at a gangbusters 7%. Why the kind of sentiment is kind of disproportionate or incommensurate with the nature of the underlying shock. That's what prompts, the answer to your question: that is it perhaps something bigger and more structural going on? And the answer is yes. And one piece of evidence for that is the fact that even in the 1 or 2 years before the war began, and this is important for listeners to know, the rupee was amongst the worst performing currencies, but declining 20%, with the exception of Turkey. And despite the Reserve Bank of India spending a whole lot of dollars trying to defend that. So that 20% decline has happened despite a lot of resistance. So that shows you the underlying investor sentiment was pretty kind of not very positive about India. So then the question is why? And what we argue in these set of pieces is that, this has been a longer term problem that somehow we have not addressed and faced up to squarely. Partly because the data is telling us we're growing gangbusters, and people have bought that. But if you look at, one or two key underlying indicators, if you look at, for example, private investment as a share of GDP. Remember, private investment and exports are the two biggest and most important engines of long run growth. And what you find is that these have slowed down considerably in the last, not just 1 year, in the last 5, 6 years. In fact, over a decade or so.
In fact, one of the and I'd like to read out from what you've said, because you've talked about our bad instincts, and you listed them out, whether it's regulation favoring a few corporate houses over others, undermining federalism, using agencies against political opponents, etc. And uh, you're not making a political point. Explain to us why all of this fits then into a bigger picture of why this affects the Indian economy as a whole. It's not just about
Exactly.
politics.
Yeah, these are not political observations at all. I know nothing about politics, but to answer that, here's what I think we have to be fair to the government, right? We say, and everyone acknowledges that exports and private investment have been very weak. And so suddenly you see, calls for reform. Government should do reform. But to be fair to the government, in the last 1 to 2 years, they've actually done a lot of reform. The GST was simplified. There were tax cuts. The labor laws were simplified. More sectors were open to FDI, and critically, India, defying a lot of opposition, has negotiated a free trade agreement far-reaching with the European Union, and has a provisional whatever agreement with the United States. So you cannot accuse the government of not having taken reform, and yet it hasn't quote unquote worked. So the question is why? And the point we make, and the point I want to stress, is that it's very important to understand that what the government has done is to try and reduce the costs of doing business on paper and in terms of policy. But the deeper problem seems to be that the risks of doing business on the ground in terms of implementation clearly haven't worked, because that's why you don't see either foreign direct investment or private investment picking up. And so what we say is that maybe that's because the government has taken action on paper, but in terms of implementation and how it actually treats investors on the ground, it hasn't worked. And what are those elements? No secret that some groups are favored over other groups. So, and while these groups may invest a lot more, the impact on other investors is slightly chilling, because they will say, why should we get into sectors where we think the regulatory playing field will be against us? Others will get the other thing is the weaponization, frankly, of various parts of the state apparatus, whether it's the enforcement directorate or the tax authorities, in a way that's arbitrary and maybe selective, again, which kind of makes people quite anxious. Of course, decision making needs to, in India, with cooperative federalism, as which should be our motto. I mean, there's a lot of political centralization and kind of unilateral decision making that, again, makes investors a bit nervous. So I think, to put it another way, I would say that when people say the government needs to do more. So there's a to-do list of more reforms. What I want to say, and we want to say, is that maybe there's a not to-do list. Not to act on these basic instincts, which really deter and kind of make investors very nervous on the ground.
What you said, though, that's I think generated the most buzz, has been about a change in personnel. I mean, that's what the Indian Express kind of led with in your column yesterday. And I wanted you to elaborate on that a little bit. When you are saying that there is a kind of a drift in decision making, which is what I deciphered from that. Are you talking about changing bureaucrats? Are you talking about changing ministers? Are you talking about the political leadership, bureaucratic leadership? What does it mean?
So I think, obviously, I don't want to name names or list anyone in particular, but I do think that the personnel change at ministerial, bureaucratic, advisory, technocratic level is overdue. And the question is why? Why is a personnel change? After all, when people say, "Oh, the solution is do more policy reform," maybe those who are in power now can do that. I think the reason for calling for personnel changes is twofold. First, I do think that, in modern markets, credibility of the interlocutor matters. Mario Draghi famously said, we will do whatever it takes. And it had a big impact on markets. So there's kind of signaling effect of having credible, honest, transparent, competent interlocutors. And I'm not saying the government doesn't have them. It's just that, in the last, when this crisis has been going on, there is a sense that, whether you turn to look at New Delhi, the centers of economic decision making, or Bombay, there is a sense that, they're reacting to events rather than coming out and saying, look, this is the problem, these are the numbers, these are the challenges, and this is how we intend to respond to them, with a cogent, articulated plan. So that's the first part, the credibility of the interlocutor and the signaling value. The second thing relates to what I just said earlier, that if you think the problem is, instincts and basic things that need to be changed, if the same people are in place, it's unlikely that those habits, those ideas will change. So that's the reason why you need people who are willing to speak openly and honestly, and people who will not say things because they're expected to say things. And then above all, I think that we tend to forget that the beauty about democracy is churn, in decision making people and so on. And there's a certain staleness that comes if the same people, at ministerial, bureaucratic level are there, staleness of ideas, habits are the same. And because we need to kind of tell investors that, India's kind of different place now, and please, invest, it requires, I think, a change in personnel to signal that, change in some fundamentals.
So you're saying that the government doesn't need cheerleaders. It needs people who can, dispassionately tell them the truth. That's wishful thinking.
No, I see. To be fair, again, I mean, again, we know that when one of their own or whatever, someone who's otherwise aligned with them spoke up recently, it did make a difference. So I think, it's useful to have voices like that.
Yeah, and I think part of that would then be acknowledging that there is an issue, because just I think earlier this week, maybe a day or two ago, the finance minister said something about a cynical narrative that's being sort of spread about India, that there is fear mongering, and that's not that's not warranted, and so on. But again, are we living in a state of denial about what's really going on with the economy?
Well, I think the more I think policymakers get defensive and accuse others of cynicism and fear mongering, I think it doesn't reassure investors at all. I think investors are feel much more reassured if there's a kind of transparency and openness, and of course then a willingness to act on that. You have to have both. But if you deny the problem, then even your solutions will be maybe not up to the mark. So let me give you a kind of a less cynical version of that argument, right? I mean, it's not just there is denial. That's, I think, maybe it's true to some extent,
But
but there's
also there's
also.
obsession with headline management. I think that's what I was trying to say. Is there a sort of an obsession with controlling the narrative rather than setting it?
I think there are two things here. One is headline management. I think that's absolutely true. But the other is to just more substantively is to view this problem as, oh, it's a matter of just getting capital to come back again. That you must reduce speculation. We must incentivize and offer new schemes for investors to come in. So that's a different kind of denial. One is to deny the problem itself. The other is to kind of deny the real origins of the problem. And I think both are need to be addressed.
I want to come specifically then to the hike in fuel prices that India is being hit with currently, in incrementally. And again, one of the things you have talked about extensively is the problem with the fact that our that the government subsidizes electricity, it subsidizes fuel, and that it should be doing that for the poorest, not for everyone. And in fact, you've also said that an incremental price hike would be better than slamming people with big hikes all of a sudden when things go south. Um, In other words, I want to ask you, is this going to get much worse for us before it gets any better, given the current uncertainty about what's happening with Iran?
Yeah, I think and here I'm not the expert in terms of assessing what's happening globally, but I do get the sense that there are more people who are worried, or at least enough people are worried that, there's no solution. And even if there is, I think just getting capacity back online, on stream, is going to take so much longer that we should prepare for things getting worse before they get better. Now, if that is the case, what should be our response, even in terms of the short run? And I think it's really important to emphasize one thing here, is that we have, and this is not just this government, all governments in the past have had great difficulty in setting energy and fertilizer prices close to the cost of production. I mean, this has just been an Achilles heel of the Indian economy, that we can't do that. I think for a brief period, the previous UPA government managed to raise petroleum prices up to international, but thereafter, again, I think there's been a more subsidization. And here, I just feel that now that we have instruments like DBT, for example, it is really possible now to slowly adjust energy prices to reflect something close to their cost, so that we do get rational use of these things. Remember, when urea is free, obviously you're cushioning the poor, but there's a lot of waste because it's free. And we have to come to grips with this problem. And with DBT, we should be able to protect the poor. So it's one of the paradoxes, right? That here's a government that is politically so dominant, it should be able to take measures that will inflict some political pain in the short run for a lot of gain in the long run. And I think the whole energy prices, using prices getting close to what the markets are saying should be the prices, but cushioning the poor against that, I think that's a real policy challenge that this government and all the governments in the states actually should, I think, take upon. Because if global prices are high, market prices are high, you cannot indefinitely have heavily subsidized energy prices.
Absolutely, but I think the reverse is also true, that when oil prices were down internationally, we did not see the benefits
That's
of
a,
that.
that's a very, very good point. I think so. In fact, in the piece, one of the pieces we say that part of the problem with having cheap or subsidized prices is that they only go up; they never
Yeah.
come down. And that, I think, is a problem, because people say, look, what is this? They forget sometimes that they're getting subsidized prices, but when they only see it going up, it does create legitimate anxiety, saying, what is this? We only see price increases. And so part of the reason to have more realistic pricing is to have consumers not just feel the pain when prices are going up, but also benefit from when prices are coming down.
I think it doesn't help also when price hikes have been held back because elections were taking place, as
Okay.
we just saw, and immediately when it finished, as expected, they went up. But i- in terms of what shocks we should expect economically because of this war in the short to medium term, uh, we've already seen the impact on fuel prices. What else should we expect over the next few months, in your view?
Well, the RBI will have tough decisions to make. I mean, if, for example, the pressure is maintained, then, should they raise interest rates, or let the rupee decline more? So I think, as we say in this pieces, two sets of prices have to adjust, right? One is the energy prices. Hopefully, it'll be slow, gradual, and protecting the vulnerable. The other set of prices are exchange rates and interest rates. They also have to adjust, especially if these pressures persist. And those are calls that, if inflation gets very high, then maybe this is a kind of now a debate that's kind of happening in the United States. Inflation has perked up quite a bit. So the question is, whether interest rates need to go up here, and that's a dilemma that the RBI will also face, and it's something that the people have to be prepared for. Citizens have to be prepared for. Maybe a slowing economy more broadly may have to be a consequence of these high energy prices. I mean, and that's why this is a stagflationary shock. You're going to have higher prices, and because costs are going up, production has to come down, and so that will also be a sacrifice that will have to happen.
What did you think of the Prime Minister's appeal for austerity measures? Don't travel abroad, don't buy gold, etc. You think it will
You,
work?
you know, I have two responses. One is, of course, I think all leadership is about, using it as a bully pulpit to, whatever for action. But of course, it has to be followed up with a concrete plan of action. And the one thing that did come to mind is that, it is true that we have to economize on foreign exchange. Middle class and upper middle class foreign travel or education or whatever, needs to come down. But then the way it should come down or is when the exchange rate declines. So on the one hand, we can't say we do need to economize on foreign exchange, like less middle class travel abroad, less spending on education, and at the same time not allow the exchange rate to depreciate, because that's exactly the mechanism that forces people to travel less and spend less on education abroad. So there's a kind of little bit of a cognitive dissonance there.
Finally, Arvind Subramanian, when the government keeps telling us that actually things are not so bad in India, we're doing better than some other economies around the world, is that true?
I mean, these are all slightly. I feel that this whole competitive nationalism when it comes to economic policy, I think it's not very fruitful or productive. I think that people can play these games, but the key thing is what's happening at home, what's the best way forward. How do we protect the most vulnerable? I think we should look at it in terms of what's actually happening in India. It's true that we can take lessons. One thing, of course, is that everyone is being affected by this. It's not a. It's and to be fair to the government, this particular energy shock was completely thrust upon it and the rest of the world by a recalcitrant United States and other actors. So it's an exogenous shock, but I don't think it's very helpful to say, oh, we are doing better, we're doing worse. We have to solve the problems at home. Maybe we have lessons to learn from other countries, but this competitive, jingoistic economic or jingoistic or economic jingoism is something that I think is left to the polemicists rather than to the serious people.
I like that. Economic jingoism. That's something I'll add to the dictionary, to the vocabulary. Thank you very much, Arvind Subramaniam. I think you've, laid the picture out for us. We should be prepared for a period of economic pain inflicted on us by the war, but also perhaps take a deeper look at the structural issues that the economy faces at this time. Thank you for joining us on Decoder.
Yeah. Thanks for having me.
And we'll be back with much more on this developing story next week. See you then.